Hello and welcome to the Weekend Investing Daily Bite of 27th of January. And the market just doesn't stop. I mean, we had a huge gap down this morning and there was virtually no recovery through the day. Of course, the developing news is that Nasdaq futures are down 3%, SoftBank is down 15% overnight trade. Nvidia is down 10%, $350 billion has been wiped off on Nvidia in just the pre-market open. So big moves are happening in the global uh, tech scene, and we are getting hammered more than whatever internal issues we were facing so far. So I think extremely unlucky also for the timing of this breakdown of US tech stocks and the AI story. Let's see how far this goes, but it does look like the AI story has been pricked by this Chinese company who seem to be developing similar kind of artificial intelligence tools like ChatGPT at a fraction of the cost. So if that really becomes the sort of go-to product or the technology, then a lot of these very highly valued companies will of course collapse. And of course, any collapse has a very trickle down and sort of a avalanche kind of a impact on the rest of the market. So India market, although it was very weak even as of Friday close, but today's trigger has just wiped out a good few percentage points of our market cap also. So not looking good. I wish I had better news, but as of right now, really a tricky situation to be at. So big fall today. Is it time to exit small caps? We'll discuss this. Uh, I'll show you some historical perspective, some contextual perspective is required to assess where you are in the cycle. And of course, the call will always be yours. Disclaimer, please read the disclaimer fully and subscribe to the channel. Let's see where the market chart is headed. So we have broken down convincingly below this consolidation today. I was hoping that this consolidation will stay on till the budget at least, and then we will decide where to go. But today itself, due to global cues, we've broken down. So 23,000 is gone. We are at 22,800. And there is really no support right now in immediate vicinity. 1.14% down on the Nifty. Nifty Junior down 2.8%, so deeper uh, gash here, and continuation of this down move has started once again. 2.8% on Nifty Junior. Mid caps collapsing 2.8% also. So new lows on mid caps for the last 1 odd year, and small caps also falling about 3.6%. So the biggest hit has come on small caps, 3.66%. It has just stopped where there was a gap. I should have shown you a lot larger chart. There was a gap near the June 4th movement that has got covered today, but that really does not give any solace to the current situation. So we are now down from 18,700 to about 15,400, uh, approximately maybe 16-17% down. Um, the chart is not looking pretty on any of them actually. Bank Nifty, you can say, is the only sort of chart where 0.63% was erased and it actually tried to come back during the day. The rest charts did not even try to come back after the morning open. Bank Nifty opened low, but it continued to try to make up for the day. So Bank Nifty probably is the best current strongest index out there. Advanced decline is not worth even talking about. 450 declines to 49 advances. So really bad day. Heat map, ICICI results were good, and that was up. You had fortunately State Bank also remaining in the positive. Hindustan Levers has stopped dropping, 1% up. ITC is flat, 0.3%. L&T is flat. Maruti Mahindra was flat. What was losing big was IT stocks, Infosys, HCL Tech, Wipro, TCS, Tech Mahindra. Energy stocks, ONGC, Coal India, Reliance. HDFC Bank continues to fall big, 1.2% there. And you also had some FMCG stocks, Nestle, Tata Consumer also drop, and power stocks like Power Grid. Even pharma stocks were dropping today. And you had uh, some names like Bharti Airtel also give up some ground. Tata Motors was the biggest auto loss today, 2.8%. Nifty Next 50 was awashed in red. You can see most stocks are 2 to 5% down. DLF, after its fantastic numbers, managed 1.2% gain. Torrent Pharma managed 2.7% gain. But other than that, there was really no major gain today. Sectoral trends all red. Banking the least. FMCG also not much, 0.7%. In front of 3%, 0.7% is looking good. Real estate at in the beginning in the morning was in the green, but that also succumbed to minus 1.1%. Metals, IT, public sector enterprise, pharma, energy stocks, these were the ones which lost more than 2%. IT the most. IT has now lost the entire weekly gains that it had. And in fact, even the entire month is now zero for IT, which had started to look into the green. Energy stocks and real estate stocks are also now leading 3-month losers. So really no green shoots available anywhere on the market. Capital market segment, the Nifty Capital Market Index fell the most, 5.7% down on this index, and these are the stocks that make up the capital markets index, where the CDSL stock and Aditya Birla AMC dropped the most, nearly 10% each. Then CAMS, Nuvama Wealth, BSC, Nippon Life all dropped more than 5 to 6%. Angel One. So suddenly now, sector after sector is getting thrashed, and that's sort of creating a lot of ripple effect, one sector after the other. So this is probably, sort of natural in a very steep declining market. Whatever is the uh, sector of strength left will also get broken. So one at a time, you basically will see sectors going down. So let's now talk about this fall. So big fall today, no doubt. I mean, this is a big fall. Is it time to exit small caps? Is the question. So it whenever the market falls and we see red in our portfolios, we see a lot of blood on the street. It looks like it's the end of the road. One should just quit. So that feeling will always come. We on the small cap 100 index especially, we are down approximately 17% from the top. But this needs to be contextualized. 17% drop, of course, uh, is deep, but let's see some of the past moves. So, for instance, uh, small cap 100 index was at 2600 in August 2013 before the rally started in the last decade. And if somebody told you at that point that in the next, let's say, 12 years we'll hit 16,299 at CAGR of 17.4%. I'm talking about the index, so strategies likely are going to beat that index, some of them. If it would have been difficult to believe that, you would say, okay, I'll take that with folded hands. And from there, you can see that uh, the next point, this was the rally from that point, and then there was a nice decline after 2018, and we declined to 6,200 again. If somebody told you we'll hit 16,300 in next 5 years, it would have been a CAGR of 15%. That again would have been very acceptable. And in the last move, basically, after this, we peaked in October 2021. We had this fall. We came down to nearly 8,000 levels, 7,900 levels. Here again, if somebody told you that small cap index would hit 16,300 in the next 2.5 years, it was unbelievable, right? CAGR of 32% for the next 2.5 years. So this uh, has happened, and now we are a bit off that new high. Our expectations are basically built upon that whatever we have seen on the screen as the high is already in my pocket. Now whatever is going away is my loss. That mindset basically is the reason for most people to feel hurt, to feel that they are losing money. But actually speaking, if a stock goes from 100 to 200, and an alternate stock goes from, let's say, 100 to 500 and comes down to 300, the guy who has the other stock, the one that goes from 100 to 500 to 300, is much more in pain, whereas the guy who goes from 100 to 200 is very happy. So if this move that we're seeing now of the fall, instead of all this, had we grown at a lower CAGR of, let's say, 15% in the last 2.5 years, we would have still been possibly much lower than where we are today, and we would have been happier. But because we saw this, this huge hump of 32% CAGR, is that we are feeling that, uh, that was already in our pocket. So this thought process needs to be aligned, that you uh, you were going to get that return, but due to whatever reasons, there was a different path taken by the market. And as long as you are following your path of whatever strategy, whatever you know investment style that you're following, I think for most investors, for most seasoned investors, they really don't bother. You talk to any seasoned investor, yes, the losses pain everybody, but they are not going to run away from the market, because they have seen this cycle so many times. I mean, I myself have seen this cycle, I don't know how many times in the last 30 years. So there is no question of running away from the market. A lot of folks on the Twitter and everybody's, a lot of places are talking, should we quit the market? Should we, think about the markets once, let the market find its bottom, then we will come in. Who will tell when the market bottom is there? I remember clearly when the COVID fall was happening, till possibly even 2021, in this entire period here, nobody was believing that this rally can last, because it was a sort of a reactionary rally. And even till we crossed this pre-COVID level, even till then, there was no belief that this rally can last. And in fact, small cap can go like 4x from the bottom in that kind of an environment. If markets can do this in an environment where one was not able to see any growth, in fact, survival of companies was difficult, who can say whether we will come down, go up? There is really no way of saying that. Absolutely not. So the alpha in small caps is, of course, the fascination of the small caps, but we don't want to go through any pain of any correction. So there cannot be just one way ride. You have to persevere the pain if we want that alpha. Um, the fall has been quite sharp. The fall in small caps over past history have been much sharper, much lower, much deeper. But then we don't know yet that, are we in that kind of a situation where the entire market is collapsing and we are going to really hit the bottom in terms of a complete mayhem kind of a situation globally. If that happens, then there is much more pain to come. But if that is not happening and we are finding some ground where we will consolidate, maybe not. So it is very difficult to say. I mean, nobody can really call it as such. So excesses have to be removed. Consolidation is necessary. So after 2003 run, I mean, you can see we went from 700 to almost 5,000 plus 7 8 times we went in 3 4 years. A global crash happened. We recovered very quickly. It took some time, but you were back in action. Again, here also, SEBI mandated that more mutual funds will need to get out of small cap stocks, those who are not small cap oriented. So we already had this selling, and then there was this capitulation phase in 2020. We recovered back very, very quickly. And just see the comparison of the fall here versus the falls that you see otherwise. So in terms of where we can go much deeper for sure. But what is history telling us? That the the small cap index comes back. The small cap index is designed uh, to stay with the best small cap stocks. So your strategy also should rotate into stocks that will recover and not sit with duds, because a lot of stocks that were here, once they fell down, the indices would change, the rebalance would happen in them, and this rally would not be there in many stocks that didn't that fell in that crash. So the strategy needs to be adapting to the newer stocks that will lead the next rally upwards. We don't even know yet when the prior fall will end. So long term picture, let's look at 3-year rolling returns. So over any 3-year period in the last 17, 18 years, 76% of the times you are in positive territory at least. And currently, the 3-year rolling CAGR after this fall also till yesterday is about 14%. Not so bad actually. If you look at 5-year rolling returns, 87% of the time over any 5-year period you are in the green, not 100%, because there are peaks from where you calculate, and these are basically lump sum return calculations. So when you do piecewise or investing gradually or sipping, this becomes even much more better. So I am taking the worst case situation that you entered at a peak, and then the next 5 years rolling period. So here also 87% of the time you're not losing money. Last 5-year rolling return is 38%. I mean, so that context needs to be seen, that we are in a situation where the last 5 years, 38% CAGR has been achieved. 98% positive outcomes come when we have a 7-year rolling CAGR. So if you are invested 7 years from any point to any point, 98% of the times you are in the green, and a long-term sort of average of 7-year rolling period right now is at uh, about 9%. But it has, been higher at 13, 14% also. So that's where the history is there, in the sense of again, longer the period you are spending the time with the market, the better are your prospects of being in the green, better are your prospects of having higher returns. And again, I would like to impress here that this is the small cap 100 returns. These are not strategy returns. Strategy returns could be even better than this. So the fact is that over above 5 years, whether it is 7 years, whether it is 10 years, the rolling CAGR improves, the possibility of making money improves, and that is sort of the only way to really look at the long-term investing in the market. Gradual sipping will improve a lot of these charts much higher. So these are likely the worst outcomes that one could think of. So this is where one does not need to panic, uh, because most of the time when the market is panicking, at that point, if you are quitting, it will really require a lot of luck to come in below that period, and that too with the same amount of your investment. Let's say you're invested 10 rupees 10 times, you're now at 100, that 100 is now 80 or 70, whatever it may be, and you are withdrawing that. Now, let's say the market drops down, and you know the, and starts to go up again at some point. Will you be able to deploy that 70 rupees easily? My experience tells you that it is not easy to deploy that, because you have been sort of hurt in the market. So there is very low confidence to deploy back money. Again, if you start to deploy back 10 rupees, maybe that time that you will take to deploy back that money will probably be, let's say, at the same level where you exited. So there was really no fun of doing this, right? So my sense would be, don't withdraw any money at this stage, because this money was supposed to be there for longer term. If you were in the market for since 5 years, you've made 30, 40% type of CAGR on that. Uh, but if you have recently joined, the most pain would be for those who have joined in the last 1 year into the markets. They are seeing a fall. But I think for them, because if they have the right perspective of the time frame, then these are better opportunities to deploy more and more capital and build that allocation to the market. So continue your SIPs. A lot of folks are going around saying stop SIPs and run away from the market, and these are exactly the folks who will never make any money in the market. You you can listen to any market person who has made any money in the markets over their lifetimes and ask them how many times you got in and got out of the market. You will find that answer is zero. Whether you talk to the greats of value investing, whether you talk to the greats of maybe trend based investing, anybody who's running out of the market is a pure tactical trader. If you have that tactical trading ability in you, then you should do that, otherwise not, right? So we invested in strategies that will rotate over a period of time. You will see that weakness will go out automatically, stronger stocks will come in, and that will uplift your portfolio in due course of time. I know easier to say this and believe it, but I mean, if you go back into history and see all drawdowns, see, we have to learn from history what is happening, right? Why do these falls happen? These falls happen because a section of investors decide that I'm quitting the market. I'm just throwing my stock out of the window. I don't want this anymore, and hence there is supply pressure. There is not enough demand to hold that point of equilibrium, the supply, and then there will come a point where that supply will not be able to hold the demand, and the demand will then take the market up. So we have to bear the pain while it happens. And let me know in the comments, what are your thoughts, what are your worries. Let me try to assist you there. Thank you so much for watching. Do like and share these videos, and do subscribe to the channel. Thanks. Bye.